make sure go subscribe to Forex James on YouTube. Check him out there. He's on throughout the week in the A1 Trading Show, collabing, contributing to what we're doing here as a community, trying to make a better free stream for all traders out there. James, thank you very much for coming on, man, and we'll see you back next time.
Cool. Thanks, Nick. See you later, guys. Enjoy your weekends.
Okay, guys, we've got something fun here. Two things. Number one, we got Chris Pulver coming up next. So he is up next. But I wanted to mention something here that is currently going down. We're going to be doing some giveaways pretty soon in our Telegram channel. And if you're not already in there, we've been trying to grow our Telegram channel pretty aggressively. In fact, we've actually gained a lot of people in the crew here. And we're going to be doing some giveaways. We'll give away all sorts of stuff. But I think in the future, most giveaways are going to take place within our Telegram channel. So if you are not already in the Telegram, take a second, make sure that you're in there for a chance to win. We'll be playing some games. I was thinking of doing like a word search puzzle game or something like that. But we'll give some stuff away, whether it be an Edge Finder or memberships or whatever. But if you're not already in there, make sure to join. We just dropped the link here in the chat. Take a second and maybe you'll win something. Who knows? Okay, up next, we got Chris Pulver taking over the show to cover what's going on in markets. We had a little bit of a Michigan consumer sentiment thingy, made the market sell off here. Maybe Chris can answer a little bit of what's going on the other side. Stay tuned. We'll be right back after this quick break.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat and you can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. What's up, everybody? Happy Friday. Pretty wild move there right around the 10 o'clock handle. Couldn't really make any sense of it out of why. You know, everyone's like, oh, it's consumer sentiment. Oh, it's this. I'm like, no, it's not. There's no way that the market would move on that news all by itself. To me, this is what I see. Technically, this market has done a creepy similar week to last week, where we had gap lower, spend the entire week fighting back, and then Trump tariffs were talking about Friday afternoon. Then we had our gap lower, spends the entire week fighting back, and what happens at non-farm, we end up just showing a little bit of a red. So I think it's going to be a bunch of noise today. If the market is somewhat contained, we just had like this crazy move. I'm also watching on the futures market, where we have, this is the non-farm candle, this little indecision guy right here and here, and then we had that big explosive move to the downside. Now, I don't know if there's any follow through. I'm actually going to cancel this futures order. I'm going to cancel that and just stay out of the noise for right now. I think we just have a bunch of noise, and if you go back to, these are the recent all-time highs. So we have all-time high that faded hard, tested that and faded and failed. I mean, it's, like I said, like really creepy to see that the market's almost an exact replica of what it did for the last week. I mean, almost like to the point. This would be kind of wild. So what's this peak to trough right there? That is 165 points. What is this peak to trough here? 195 points. Now, as far as the pullback goes, what's the percentage of this pullback? About 2.6% and about 2.96%. So it's just, I don't know, it's something. But I don't think this is just the news, right? There's no, I mean, what low impact news at 10 o'clock has this type of reaction? None. So I think that's why we're looking at, it's a bunch of noise. And I'm curious if the market just put in the, high for the day, possibly even the low for the day, or if this is just maybe some safety and profit taking. I read some stuff that the Fed's only looking at maybe cutting once this year, but I didn't see anything change on the watch tool. So still looking at a June and December. Actually, no, this did change. Okay, let me see. I've got a screenshot of this. Hang on a tick. Yes, it is Zoro. I'm also liking the Alibaba long. That is for sure. Let me check something really quickly here. So this account, yep, liking that quite a bit actually. And Baba to the upside right now is up around $5,000. So yeah, nice little run on Alibaba. Hopefully a lot more to go. I took a screenshot of Fed Watch tool. This is from the 6th. So yesterday. So yesterday at 3:11 p.m., I took a screenshot of this is what the Fed Watch tool looks like. So showing the probability of a June cut. So they'll be right there. And then the market was anticipating a December cut. Okay. So this is yesterday. This is today. Does anybody see a difference? Right now, the market's still looking at one cut for June, but nothing else for the rest of the year. Okay. I mean, that's a pretty big shift. Now, granted, we get into October, December, it's a slim majority from a pause to a pause to maybe still having a cut. But right now, the probabilities have shifted where only one cut for the year. So is that the reaction that we got? Is that why? I don't know. I mean, it seems like peculiar how it was timed, like right around an intraday high, right around making a slightly lower high. This is the one thing I just watched on the technical side. There's a high, lower high, and right around this kind of perfect trend line lower high, it's like price just reacted. So just shy of that, it's like just a sharp price reaction. Now, as I said this all week, I'm not bearish on this market unless we actually give it a reason to be bearish. And right now, this 60-50 handle, breaking below this, I would say that this market looks like it's in some trouble, at least in the near term, right? So is there follow through next week with inflation data coming out on Wednesday, Thursday? We have CPI data, PPI data. That's inflation. That's really what the market has a bigger reaction to. PCE is like the Fed's primary gauge, but CPI, PPI is what the market's watching. Like that's headline CPI. Is it going to be, up or down? I don't know. I mean, based on what I see on Trueflation, it looks like it should be printing lower, but we don't have that forecast until next week. Okay. 1 year inflation prelims forecast. Ooh, that's a big jump. Is that what it was today? We had the University of Michigan. I mean, that there was no forecast, but previous 3.3 now printed 4.3. That's way up there. That was the 10 o'clock news. Again, though, it's medium impact. I mean, you're not seeing anything here like University of Michigan sentiment report. This does show probability of June cut drops. Okay. And data shows a jump in year ahead consumer inflation expectations. So, here we are at 10:22. It's like that move happened at 10 a.m. That's the crappy part about the news is sometimes it's instant and you're wondering what the heck happened. And other times it's like, 20 minutes later, I guess I have a little explanation, but I'd say the big adjustment would be that the Fed is only looking to cut once this year. That's a pretty big shift. So now I'm going to take a screenshot of this. And this will be Feb 7 at 10:28 a.m. And save that just as a comparison. So Fed Watch tool. All right, so let's save those couple of screenshots. So that's about the only real major rocker news that I see. It's like, okay, so the Fed clearly is expected to do less this year, like no more cuts or one cut maybe in the summertime, but then pausing and staying restrictive. We have inflation data next week. We'll see where that takes us. You can see again how sensitive these markets are. Period. That's what we're going to be dealing with probably more than anything is just hypersensitive markets. Earnings wise overnight, we had earnings on Amazon. Earnings this morning, Canopy Growth. I mean, this morning, like before market open, there wasn't really a big one. Amazon's interesting. Amazon had a reaction to the downside. We're trading at 229. I've got to trade out to next week to see if we get below 222.50. Also, I'm watching AMD today. I doubt we're going to make a big move, but if somehow we get another, $2 to $3 to the downside, I can turn this into a positive trade. Otherwise, a lot of my earnings are out to next week. I've got Qualcomm out to next week. What else? I've got MicroStrategy out to the 21st. I've got Uber out to next week, Disney out to next week, Qualcomm out to next week, Amazon next week. Today, I've got AMD and CMG that I have to manage. Took a nice little winner on PayPal, nice little winner on Palantir. So PayPal was a winner. Had a good week on SPX this week. Trying to think what else. Oh, I took credits on Snapchat. So I was talking about this week. I was planning on a potential assignment, but what's kind of nice is the premium that I collected here. I collected $309 and I closed out for $2.10. So I actually kept around $1 credit and took 0 assignment. So I don't have to allocate. I was gonna own, if it came down to 1050, I was gonna own 400 shares of Snap and repair this thing. But instead, I'm just getting rid of it and keeping the buying power. So I'm not taking a hit on the buying power side, which I'm fine with, and I'm taking that as a winner. So if anybody's in, this is going to be an update for Pulver alerts, but I'll go Snap with those puts. Yep, so I'm going to update that trade right now. Let me see what those are trading for. Let's go Snap. Yeah, you can still get out around 225 to 230. So I'm going to go reply to this one. Trade management update, Snap. Trade management update. Instead of taking the assigned shares, I'm going to close all 4 sell puts for a net win. So 309 credit, closing for 2.30 debit or less, and no assignment. Over the weekend on the, it would have been the 12, 11.50, $11 assignment. So taking profit, avoiding assignment. All right, that is going into Pulver Alerts update. There. So I did that this morning. Yeah, between 210, 215, 225, I'm just closing out and taking on no assignment, and I'm just going to keep building up my option and stock buying power. I was at a fresh high today on the year for just a minute, and now I'm down a little bit. I think my high for the year is like 136. I'm up to 128, so I'll see if this continues to build, which, all things considered, I mean, is anybody like super stoked that we're sitting here for the year, like down 3, 4, 5%, back up, still down a couple percent from the all-time highs? I mean, I don't mind making new highs when the overall market's not really going anywhere. So anyway, but I've got some kind of creative income trades that are running right now. A trap up here, traps to the downside. I got all sorts of stuff running. Premiums have been slightly decreasing with the IV rank dropping. So like this week when we started on Monday, this IV rank on the SPX was up to like 27, and it was really nice selling premium. So I did some income trades on SPY and QQQ. But now it's since dropped at 14.5, showing like another low vol play. You take a look at the VIX, you're going to see that reflected in the volatility index as well. So the VIX is down to 15.35 off of recent highs on Monday's open up to 20. So again, selling volatility, looking at your SVXY, it's just not a big enough reaction for me to say I want to take some type of trade or anything on SVXY. Dollar index, still some chop right now. Oil is kind of playing some games. I mean, oil's back up to 71.30. I'm still looking to see if I can squeeze out a few bucks on my iron condor. Natural gas is pushing a little bit higher. I'd like to see some fresh highs in this one. Gold you guessed it, still going high. I had a good one-on-one session with a trader yesterday in Australia that we spent some time talking about gold. And Cameron, if you're watching, that was a fun session yesterday. So hopefully you got a good little trading session in. But we're still making some highs. This trend is pretty relentless right now until it bends. I think there's a lot of good dynamic support on gold. I wouldn't fight this thing. I wouldn't call the top on it. But I obviously would look and see, like, does gold pull back to here? Yes, no, maybe. Does gold just keep ripping higher? I don't know. I mean, we are getting some divergence on the higher time frames, but until price actually shows it's going to pull back, like, gold just keeps staying bid. And this is a bit of a dollar diversifier. This is kind of a safe haven buildup. And also we know the central banks in the backgrounds are just buying gold like crazy. So gold futures up, GLD cranking. I'm happy I own the shares. Lots of credit spreads. Silver also breaking some fresh highs. I mean, part of my gains for this year, if I'm seeing fresh all-time highs, it's probably going to be because of the nice little run on gold and silver that we're having. And I'm good with that. SI futures still have a trade out to March. So that's looking pretty good. SI, I did a diagonal spread on this one. So SLV, I have some shares. I have a 15 by 34 diagonal spread. And then I have the 600 shares called and covered at 35. So, I mean, SLV is a pretty good chunk. I mean, 35 is still, $6+ away. 34 is still $5+ away, or $4+ away. If it gets called away, so be it. But I don't really want it to be called away. So we'll see how those play out. But it's a good looking position. But yeah, I mean, I still like silver and gold. Futures wise, I really like this position down here. Let me see if I can get another one if the premiums are decent. Let me go to like April or May. Let me look at an SI position here. SI, April, and go into the 26s. So if I did a 26.50 by 25 by 26, that's not awful. So what's that income? Make $50. Can I get this a little bit larger? I mean, that loss would suck. 24. Make $100. No, I'm not going to risk $8,600 to make. I mean, it's a high percentage of profit, but I'm just not collecting enough premium on it. If I do let me see here. It might just be better if I just do a spread. $90. Nah, it's just no. It's not good enough. I'll stay out of the futures for right now for SI. Right now, I'm just going to enjoy SLV going higher, and I've got a futures trade out here that I liked, and that one should be fine for profit in March, hopefully. Bitcoin 98. Expect some more sideways movement. Indecision. I think there's some good opportunities to be getting in around the 91 to 90K mark. If we break and go a little bit lower, we just fill some of these inefficiencies. I think an 80K mark is a good spot to be positioned for, Bitcoin, at least in the medium term. I don't know how people can be bullish on Bitcoin and also be bearish on the stock market. You're going to want to see the same thing. If you're bearish on Bitcoin, if you're bearish on the stock market, that means you're probably bearish on Bitcoin, whether you realize it or not. Now, you could say, like, well, I'm diversified. Bitcoin is not a diversifier. It is not a diversifier. It is risk capital and risk appetite. I just don't see the stock market going lower without Bitcoin going with it, or the Bitcoin. That sounds like a boomer. Bitcoin going higher with the stock market going with it. I think they are still kind of bound. I mean, look, SPY has been sideways since basically mid-December, and Bitcoin has been sideways since the same spot. Like, right since we had our election run, this has been sideways. Stock market's been doing the same thing. So if you want to cheer on Bitcoin, you better cheer on all-time highs in the stock market, because if we don't get them, we're going to be expecting to see a lot more volatility. MicroStrategy at 335. This one gets called away at 310. If I can, I don't have to do anything. It's fine getting called away at 310. Coinbase, we have earnings on this one next week. I'll take a look at that. Ethereum had a pretty rough week, and I'm out of that for right now. Copper, oh my gosh, you got to be effing kidding me. Son of a bee. Well, there's a copper trade for you. All right, well, Dr. Copper, breaking some crazy runs. Now, I don't know if this is all because of China, if this is because of commodity space. It could be a lot of things, but copper is making some crazy runs. Base metal prices, copper at 3-month highs, Chinese buyers return. There you go. I said this last year. I'm like, if copper is going to go up, we probably need to see an uptick in China. We are getting an uptick in China. HSI is up. Alibaba's ripping really nicely. The other stocks are showing resiliency. Look, China going up is not a bad thing. Technically speaking, it's probably one of the best asymmetry trades I have in an equity space. You know, the U.S. stock market is sitting here at these crazy high valuations, and we're sitting near all-time highs, but China's been so beat up and beat down that nobody wants to invest in it, and so here it is running without everybody. This is why I've been participating in China. Now, copper, on the other hand, yeah, it's making a run thanks to China. Do I want to get in this trade? Probably not. I was hoping we'd have at least some consolidation to get in around the $4 handle. Now I'd have to look for something like this. If we go up and then have a pullback, then maybe I revisit this entire trade. If copper just gives us a bull flag or something like that, that would be ripping higher, a little bit of a pause, and then see if there's higher highs coming. But I will say, look, I don't have to force and chase a trade in copper, because this thing's going up means China's probably going with it. Okay. There you go. Caught some copper with Edgefinder. That's perfect. Japanese yen futures, sitting on some gains on Japanese yen futures. I've still got some more time. Let's see if this one can get up a little bit more into these recent highs. This trade right here, I'm already up like about $250 on this trade. My max profit's around $1,200. Realistically, if I see quicker rather than waiting to September, if I see like $500 to $600 of profit, I'm probably just going to take the profit. Rather than waiting for full credit in September, I'll just take the 50+% of my max profit on the defined risk. But I'll keep an eye on this one. I see this Japanese yen playing out a couple of ways. Either this goes up to down, up to down, up to down, falling wedge type scenario where this thing breaks and goes higher later, or we are in the works for a higher high and a breakout, like some type of reversal pattern, like a head and shoulders or a crown. So I still like Japanese yen. I just didn't go out far enough because the Japanese yen futures contracts didn't offer anything past September. I don't think they offer up anything past September, at least for right now. So let me double check. 6J and September 2025. So that's all the farther I can go right now. But trade's working out. I'm in profit. Let's see if it goes a little bit higher. Nikkei still choppy. FXY. I'm in EWJ for a small position. DAX just poked some fresh all-time highs. FTSE, same thing. Argentina still waiting for a pullback. Chinese index, HSI, up. This is a good spot, man. I really think this is a good spot to poise China for some more gains this year. Now, like it or hate it, U.S. versus China, what does it mean? We're frenemies. This is a good thing for the global economy. Okay? If China is up, the U.S. can stay resilient. If China is down and wanting to play, cyber attacks and trade wars and tariff, blah, 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 like back and forth retaliations, that's going to be a lot more trouble for the global economy. I think if we have a year that the Chinese economy does well, okay, and the U.S. market stays resilient, I think everybody's happy. That's probably a good thing. So, I mean, this is why I think that we should be cheering on some of these stocks and see, okay, is this going to be a reversal pattern? Is China going to go and break this high with some type of like bull flag that we just revisit this September swing much faster? Or is this a pattern that's going to be setting up like this? A little bit of a pullback, more accumulation, and then another break to the upside where we have time to actually trade this. I don't know. Right now with this momentum, this could be the part of the swing that just runs up here. Any type of bull flag, I'd still get bullish on China. That's a good target. That's a good target one, and symmetry would be a good target too. So HSI making its run. The exposure I have is just on a few stocks, but I think this looks pretty promising to the upside. Copper also running because of it. Brazil looking pretty good as well. Apple, we had earnings. They faded since earnings. Amazon is down. I'm going to see if this follows through next week. Google still following a little bit lower. That's okay. I'll wait for this to come back down towards the 200 moving average. I did take a small position on Google this week. If we come back down to the 176 level, I'll add another chunk. 150, add another chunk. If we get to this 200 moving average, I'm also going to look at a probably a 1-1-1 trade where I can buy a put, sell a put, sell a put, or do a ratio spread of some sort, and looking at potential ownership around the 150 handle. So Google to me is on the cards for a good spot. I'm going to try to get this gap filled and see what happens around this 200 moving average. If the IV goes up, I'll look to probably sell some premium on that one. Meta actually poked some fresh highs today. Microsoft, I did a little dollar allocation. I've got a bunch of ratio spreads and some 1-1-1s. Netflix poked some fresh highs, but fading. I've got a broken wing butterfly at the 1040 level. Hopefully that ends up being a good trade. Speaking of Microsoft today, I do have a broken wing at 405. That's going to be a winner if it stays above 405 today. So that gives me winners on SPX. I've got 8 for 8 this week on SPX, 7 for 8 on one account, 8 for 8 on another account. SPY winner times 2. Snap, I'm taking the net profit, so that's 4. Palantir was a winner on earnings. EA was a winner on earnings. I'm taking a potential loss on CMG and AMD. Potential losses, the day is not done, so I'll let those run. But overall, pretty active week, pretty good week. Chart alarm set at 405. That's actually a broken wing butterfly pin price. So if Microsoft drops to 405, I'll make like $2.77 a contract. But otherwise, they just make the broken wing credit. So anyway, this stuff to monitor for the day. Netflix, that expiration is, let me see what that expiration is. I think it's in end of the month. Netflix. Yep, end of the month. So 1040 is a pretty good spot. Let me draw this trade up real quick. I'll show you what this one looks like. So let's go Netflix. Build this out. This is a 28th expiration. I did a broken wing, so I bought the 1030 and sold the 1040 and bought the 1060. So this is the trade on Netflix. So the big profit trap is up here. So if by 228, which is the end of the month and the expiration, if we are sitting here at 1040, then there's a big fat profit trap for me. Okay, if we go up a little bit higher, I can stomach that. If we go down a little bit, I still take my dollar credit that I took initially on the trade. But this is around a $11 profit trap. So is it hard to get? Yes, it'd be like the perfect trade. But I'm giving myself some wiggle room and some potential upside drift. But if we stay where we are, go a little bit higher or as low as it wants, I'll still keep my credit. Obviously wouldn't mind the profit trap, but there's some risk on the flip side of that too. So profit trap's great. I mean, I wouldn't mind having this thing like day of expiration, maybe getting up into this area and get a few bucks extra, but not necessarily like hoping and praying that it comes up to perfectly 1040. That's the hardest spot. But anyway, that's what it looks like. So hopefully it cooperates. Just going through the top down. Oops. Let's go NVIDIA. NVIDIA looking to fill a gap, looking pretty good. I've got a trade running on NVIDIA right now. That is a ratio spread. Did some debit spreads this week that should be showing some profit. It is a 126 by 130. Right now that's trading for 205. I think I got into that trade. Let me check it out. The 126 by 130. I didn't pay too much for it. I think I paid a couple bucks. So 11. So I paid $1.78. It's already in profit. Obviously, I want to see if we get a gap fill. Gap fills all the way up towards 142. But we could just see some more noise on NVIDIA. Tesla, 373. What's our recent low here? Check a couple levels. I still didn't hit my 362.50, which is a $1,000 allocation on Tesla. I really do like this. I mean, I like this build up on Tesla. It could just be a nice little correction, nice little like pullback, falling wedge accumulation, eventually find some dynamic support that the market's going to hopefully bottom out and start to revisit highs. I mean, could we make all-time highs again this year? Sure. If we do, awesome. So a couple dollar allocations on Tesla works for me. Let me make sure, actually, I've got a cash account here that I want to make sure has some exposure on this. So Tesla, I'm going to put in, yep, I got to put a pending order on this one. So this would be a 362.50 and a 285. All right. So let me figure out the numbers. If I do, I'm going to go 1250. 1250 divided by 373. Actually, no, 362, 362.50. So I'll buy 4 shares. Okay, so 4 shares at 362.50. And it's for this account. And then 285 be 5 shares. I'm rounding up. So I'm going 5 shares at 285. Those are good till canceled. All right, so a couple dollar cost average positions, and that's a pure cash account, so I'm limited to what I can do option wise, other than owning shares and selling calls or cash secured puts. But I'll just dollar cost average in. Berkshire Hathaway, looking pretty good, honestly. That ratio spread for March is looking sweet. I'm owning some TLT. We had a nice little pop to the upside on TLT, but we still have a trend line to deal with. So is TLT resistance? Are we going to make another low on TLT? Well, this is going to be probably the whatever $1 trillion question. Let's call it the $36 trillion question, because that's our current deficit or debt. That's our our U.S. debt, right? $37 trillion. What I'm going to say is this: like, if we see fresh lows on bonds, what does that do to the yields? If we see fresh lows on bonds, that means our yields are going up. That's what I said could possibly break the market. 4.5 to 5% 10-year yield is going to kill growth. All right. It's already, look, the brakes, it's like the market right now is operating with the emergency brake on. Like, until this improves, we have the emergency brake on. It's starting to smell funny. Okay. So if the bond market can actually break higher and yields can go lower, and you don't know this, but if the bond market goes up and the yields go down, is that a good reason to go higher? Is it just because the bond markets are showing more attractiveness, or is it because all of a sudden the equities market doesn't look as attractive? That high correlation between bonds and stocks is not a good thing. Historically, it's as high as it's ever been. So my concern is that if the bond market goes really, really high and the yields drop aggressively, we're probably going to see the equities market crashing in a little bit. Okay. Tesla, I think, look, Tesla is, when you've got Elon Musk this close to the White House, and look, I think that guy can get screwed over hard. Like, Doge, Department of Government Efficiency, I mean, if he's getting like cut off of Treasury and he's only got 13% of the entire government to even work with as far as government spending and cutting and efficiency, I mean, he could basically be like the patsy or the scapegoat for, like, oh, we're trying to fix the government budget. It's like, the government is so big and bloated. I mean, the only thing you're going to do is come in and fire everybody, and there's your government efficiency, and it's going to create all sorts of terrible sentiment. It's not going to be a good thing. So I just think that Elon Musk, if he's attached to Tesla, it could be a very volatile stock. But Tesla as a company, not just a car company, like Tesla, in my opinion, as far as higher valuations, it is more than a car company. Tesla is an energy play. It is a bit of an AI play. I mean, they're going to be competitive in everything. It is an automation play. It is a profit play. I mean, if you don't think that Elon Musk is some version of Tony Stark, where he would just have humanoids making everything in his factories and it's the biggest energy company in the world, like, that's what the guy is going to be. I really think that Elon Musk is probably going to be the world's first trillionaire. And I think that Tesla could be one of the most profitable companies, only because they don't care about the human side of it. They care about profitability, right? So it's not just a car company at all. Because if it was a car company, I wouldn't touch it. Ford's like crap anyway. Every car company is pretty terrible. But Tesla's not just car company. I mean, their Tesla models have gone from $65,000 down to $30,000. Their demand is falling all over the place. Their deliveries have been lacking. I'm not looking at buying Tesla because it's a car company. I'm looking at it because it's close to power. It's probably going to be one of the more efficiently run disruptors in the industry, and becomes more than just a car company, way more in the energy place too. Okay, so anyway, we'll see what happens. But again, it's risk, and I'll start small. So if I throw in a couple $1,000 and I've got less than 1% of the account allocated to Tesla, okay, if Tesla goes to 0, I lose 1% of my account. Okay, I'll go make it up somewhere else. But is that going to happen? Probably not. All right. Anyway, let me get back to this conversation here on the Fed. Look, if this bond market breaks these highs and the yields can drop, if this 10-year yield can go down, that would be an encouraging sign. My concern is that the yields go down, the bonds go up, and the equities market is also not making higher highs. Okay. On the flip side of that, if the bond market goes down and we start hitting fresh lows on TLT, that means that the 10-year is going higher. And again, we are choking growth. And the 10-year gets really, really concerning if we're above 5%. Right now, that 4.5 is kind of there. Anything lower than 4.5 is maybe giving us some relief. But the Fed looks like they're not going to be cutting. I don't know if the market likes that or not. And it's too early to figure it out. Like, price action isn't giving us really any clear sign of where we're going directionally with any type of momentum. It's down for a weekend, and then it fights back, and then it's down for the day, and then it fights. Who knows? Like, next week's a new week. So I'd say trade what's in front of you. And I know that sucks, because I like to kind of have the Wayne Gretzky approach, which is like, I want to trade where the puck is going, right? But I don't know where the puck is going. I think the best thing is I just want to stay on the ice. I don't want the ice to melt. So I'm just trying to give myself a lot of room for error, trade really, really small, diversify with a lot of different asset classes. So having gold, having silver, having Bitcoin, it's diversified. Having some bond, having some equities, having some different stocks, different sectors, it's diversified. Trading lots of options, it's diversified. Risk is super, super important to make sure that you're not overexposing yourself and not over leveraging. I still got lots of cash to deploy. All right. So that's probably my best idea for 2025 is try to figure it out. Don't do anything stupid. Don't overinvest. And we'll see what happens. All right. Mortgage rates came down a little bit. They were up above 7 briefly. Now they're at 6.89. It'd be nice to see a little bit more relief on that as well. Futures wise, we've got some highs on cocoa and coffee and live cattle and other things. I still think like wheat, corn, soybeans are pretty attractive levels. This is a commodity-based ETF that's starting some pretty good signs of breakout. I'd still love to see a pullback. I'm going to be kind of hoping that it pulls back, because this one hasn't really done anything. This is another one that I traded a lot during COVID. I did pretty well in this one from the crash from $12 to $30. That was a pretty nice gain. But now I'm just waiting, because if this is just a big accumulation zone, then I'll wait for this thing to kind of round itself out, and then we'll see if this goes up or if this comes all the way back down. I don't know. But in the commodity space and inflation story, we'll see what happens. Okay. Junk bonds. So it's showing your kind of liquidity in the market so far, still hanging in there just fine. HSI, like I mentioned earlier, I really like the technicals on this one. Alibaba got up to 107 today, faded a little bit, but also had some fresh highs, which is good. Baidu, still a little bit laggy, but wondering if this is enough to show us some type of reversal pattern. Maybe there's accumulation in here, and then this looks better to get back to these September highs. Like, this is a big question mark, but probably one of my more favorite technical trades this year. Okay, FXI. I'm out of this one. I had a nice little run during September. I got positioned again, got some, I did like basically I bought a call, sold a call, and got rid of it. It was like a poor man's cover call type trade. K-Web got out of this one when we had that September run. I owned shares of this one. That was a nice little rip in September. Not trading MCHI. JD, I didn't roll it. I tried to roll it a couple times this week. It wouldn't give me the credit that I wanted. So I'm just gonna keep it as is. Get it called away at $39. If it stays above $39, earnings that we have is out to the first week of March. So my expiration right now is out to the end of February. If it gets called away at $39, I get out of this trade for like $3.08 per share. But I've got I don't know. I think I have like 2,000 shares of JD. Schwab dividend, Schwab growth, advanced decline line. This will be one to keep an eye on. This is the stocks above the 200-day moving average. This is the stocks above the 50-day. Same thing on Nasdaq. A bit of a timing indicator. Look, two things. It wasn't that long ago when I was talking about, if we come a little bit lower, look for a buying opportunity. The same thing is true if we get to these highs. If we see like every stock in the S&P sitting here at or above the 50-day, I'm probably looking for a short or at least a hedge. Same thing on the Nasdaq. If we start to see that, this is a really solid range for the last like 30 years. So if we see like every stock is above the 50-day moving average, I'm probably looking for a hedge to short. It's a good timing indicator to get long or get short. Okay, what do we have here? Nothing. Costco. I think I looked at a call condor on Costco yesterday. Maybe not. Let me look at it right now. I hate to short this stock, but I got to look at it. Let me go out to the end of the month. Just curious. Let me stay out of the way here. Could I get something reasonable if I buy? So let me buy the 1085, sell that, and go a little bit wider. That's 95 to 15, 95 to 20. It's not a bad trade. The risk in this trade is like there's no way to fix this one. It's like there's an 85% chance of profit. It's outside of the expected move. If Costco's made a nice run, this is also not through earnings, so this is probably not. Actually, earnings is in March. Oh man, that could be a pretty good trade. Do I like it enough to say that I want to take it's about a 1% risk with a profit trap or an income trade out 21 days for $1.55 or buck. Maybe I'd get a little bit more than that. Like $1.60 would be nice. So it would be a trade that looks like this. I'm going to build this one out. Let me take a screenshot. Actually, it's fine. I'll just build it out. Costco. So this would be a 4-leg trade, go out to the end of the month. So I would buy a call, sell a call, and then sell a call and buy a call. All right. So if I did a 1085 buy and then a 1090, maybe I bump this up. Grab $1, take on a little bit less risk, still give myself a profit trap, 86% chance of profit, less than 1% risk. Costco would just have to rip for the next 21 days. All right. Anyway, I'm looking at it. So 1090, I want to build this one out. 1095 by 1100 and 1120. Okay. So this would be the trade. We're sitting right here at current price. I could collect the dollar on the trade. If price goes down, I keep the dollar. Price goes up, I keep the dollar. Price goes up a decent amount. We'd have to go up about $55. I still keep the profit. Okay. If we go into my profit trap in the next 21 days, I have a $6 profit trap. Now there's still risk in the trade. This is 20 wide, so my risk would be $14. Right? I'm willing to take that trade. I'm willing to take that risk. Do I like the trade enough? It's a $100 income trade, or maybe just slightly more. The bid ask is a little wide. I might not get filled where I want to get filled. So a 14 delta at 1100. So the threat to me would be at about $1,100. So if Costco goes from 1038 up to $1,100, how far of a move is that? We'd have to go up another 6%. Well, this went up around 16%. This went up around 17%. I'm very curious if like this move and pullback and this move and pullback allows me to take some profit on this. Like that's a nice stretch. We actually overstretched in this recent impulse. I think I'm going to take the trade. So let me see. I mean, I might not get what I want. I'm going to try to get a $1.50 out of this. See if I can take this trade for $1.50. Nope. So $1.50 not filling. Let's try $1.25. $1.20. $1.15. All right. $1.10 final offer. If it doesn't fill, I'm not going to take the trade. F&A cotton. Crap. Well, that sucks. I like the trade. I'm not getting the fill. I mean, there's a decent amount of open interest at 1100. It's probably a bunch of covered calls, to be honest. I mean, I see that here. It's like $1,100 with that type of open interest at a 15 delta. It's probably a bunch of covered calls. That doesn't mean anything. I'm just saying, like, if I position for it, I'd love that to be a profit trap. So if I buy, sell, and go 20 wide, maybe go 30 wide, take on a bit more risk. Not that I want to do that. Son of a bee. Down, down, down. I like that pin price. Yeah, I don't know. I kind of want, if I'm going to pin this thing, I want to pin it at 1100. I can't believe. All right, I'm going to try this trade one more time for $1.05. Try this trade one more time. Let's go for $1.09. Filled at $1.15. All right, so I'm in the trade. $1.15. $1.15. In one other account here. Okay, I'm in the trade. So Costco, putting this in my tracker. So not a bad trade for only 21 days out. Costco. So it's a 2/28 expiration. Buy the 1090 call, sell the 1095 call, sell the 1100 call, and buy the 1120 call. $1.15 credit. And then a 615 max with profit trap. We're looking at about an 86% of profit, 86% pop on that trade. There's no assignment. There's only about a, I don't know, maybe a 13, 14, 15% chance. This is also pre-earnings, by the way. So I'm just going to give it a shot. I'll put a chart alarm here at 1100 and see if price stays below it. Gosh darn it, I have 0 freaking chart alarms. All right, anyway, let me put the trade in here. So $1,100. So 1090 by 1095. $1,100 pin / profit trap. And pulled in a $1.15 credit. All right, so I'll mark that up. All right, that trade is in. So the trade looks like this. 1090, 1095, 1100, 1120. Pulled in $1.15. It's showing $1.20, $1.25, which I didn't get filled on. I took the $1.15, but this is the trade. Okay, so I'll post that in the alert section. And I think for the day, kind of wrap it up there. So we've still seen a lot of chop going. We've had two pretty good flushes to the downside. So that flush at 10 o'clock, another flush right there. You know, this market might be giving back some decent runs, like 608 gives it get down to 600 today. Bears are taking control on the sentiment side. 600 seems like a pretty big strike the market's coming after today. And you know, we tried to go higher, but obviously we failed, and that's kind of no different than the last couple of weeks where we have inch out a high, slightly lower high. That's just interesting structure that the market just can't quite get higher yet, or for now. We also have inflation data next week. So trading right in the middle of this chop, is inflation good or bad? I don't know. But next week, that would be probably a bigger, an interesting catalyst to have inflation data on Wednesday, Thursday. Does the market like it or hate it? Okay. All right. Let me get into my stock options for my alert. New trade. Costco, 228 expiration. Buy the 1090 call, sell the 1095 call, sell the 1100 call, and then buy the 1120 to make it defined risk. $1.15 credit. This is a call condor strategy. 86% probability of profit. $6.15 max credit with profit trap. $1,100 price at expiration. And I'm taking on about $13.85 of risk. All right, that'll get posted in Pulver alerts. And my screenshot already posted. So there it is right there. And in. Got it. All right, that's in the stocks, options, trades under my Pulver alert section. Okay, let's go back to the 5-minute chart. Just a very crazy, noisy day, if you ask me. I'm going to look at a trap this afternoon from 2 to 4. See if I can get a trade that looks something like this, where I have some risk and I have a profit trap. So I'm going to try to look at maybe a pin price this afternoon and try to get something. I mean, the premium might be a little bit high, but if I get like, trying to think, depends on like 2 p.m. to 4 p.m., maybe I can get like over $10 of credit. We'll see. But I'll look at that this afternoon. Okay, on that note, I'm going to let you go for today. Enjoy the Friday. Overall, it's been a pretty good week. I'm looking at maybe a small loss on AMD today. If we don't go down to 104, then I'm going to take a small loss here. And then CMG was a complete crapshoot. I thought it priced out really well. We had like 6 or 7 out of 10 earnings that actually went to the expected move, and we didn't get there this week. So could be taking a small loss on CMG and AMD. But other than that, let's see, 2, 6, 7, 8, 16, 17, 18. 18 winners, 2 losers this week. It's pretty good. I'll take it. So, all right, everybody. I'll let you go. Have a great Friday and enjoy the weekend. We'll see you soon. Thanks. Bye.
Thanks for watching today's A1 Trading Show. Be sure to subscribe and to turn on notifications so you don't miss the next one. Want more from A1 Trading? Check out the links in the description below or our website a1trading.com. We have lots of free trading tools and channels available for you. We hope you have a great rest of your day, and we'll see you tomorrow.